This is Satya Pradyuman of Cirrus Research. I want to give you a few call-out notes on the latest signals report. This is a macro report looking at key indicators such as stocks versus bonds, growth versus value, small versus large, and so on. In this report, we center on the idea that a more valuation-sensitive rotation is likely underway, potentially supporting the equity markets. This happens in a couple of ways. One, the idea that the concern, the interest rate risk that's embedded in the markets, we've really seen a lot of damage take place in a short amount of time among innovation stocks. When you look at leadership, we'll see some positive changes there as well. And so as a result, the equity outlook may be more attractive now, at least more stable, even if this could end up just being a relative performance race where they just outperform bonds on the downside. Part two is this idea about growth versus value. And in this coming window, our style oscillator has then shifted from an overweight, meaningful overweight recently, towards a neutral look on style. And in the report we walk through this, but my guess here is a couple of moving parts. One is we're beginning to realize that the Fed action underway to stem the inflation risks that will likely continue. If that's the case, the interest rate risk, it may last longer than you think. As a result, valuations win. That said, you're still in the profit cycle peaking. So this debate between growth and value, I think, is less interesting because in this kind of window, you really can't afford to buy deep cyclicals, which would have been a true sort of value run. The result is the oscillator is neutral. It's not an overweight value. So really a big deal, though, because this is a meaningful change in 18 months. The other thing that's really constructive here is this idea about large cap leadership. We've seen innovation shares break down hard in the last 2 years in smaller cap land. We're finally seeing that change echo through to the large cap benchmarks. This pie chart that we're looking at here represents the leadership basket for large cap in the US. And I think the thing that's most dramatic is we've gone from severe overweights in technology. What you'll notice here is that it's not even mentioned. In other words, it's a part of the other basket, so it may be less than 5%. So a very dramatic shift has occurred. In other words, the market's finally doing a good job pricing in the fundamental risks that are embedded in the system. It's even hitting, as we call it, the sacred cows. Take a look at the report. There's lots of details in there. As always, be happy to get your feedback and take any questions. Thank you.